Time for our Wall Street book review. Now, last week we looked at Good to Great by Jim Collins. This week, Bull by Maggie Mahar. This is a history of the boom and bust in the U.S. stock markets from 1982 to 2001. Bull was published in 2003, 2 years after the collapse of the internet bubble and the end of the age of irrationality. Now, by 1999, 49% of all Americans owned stocks. Wealth was rising at an amazing rate, she tells us. Trading on the net was just starting to come into vogue. It was not uncommon in those years for waitresses and waiters, college students, to say nothing of the Wall Street pros, to earn 20, 30%, sometimes more on their money. As she notes, when individual investors found that they could make more in a day online trading than in a month on the job, they felt the flush of power usually reserved for the very rich. The stars of CNBC were getting better ratings than the stars of the daytime soap operas. As we rolled into the 90s, the internet craze, classic value investors were out of fashion. The concept of fundamental value or intrinsic value became passé. Remember AOL? She reminds us it traded 305 times earnings, while IBM was valued at only 28 times earnings. Well, finally, in March of 2001, as you may recall, the bubble burst, and Americans learned that the big Wall Street analysts like Henry Blodgett, who was barred from the securities industry for life, were telling their brokers to sell stocks where they were telling everyone outside their firms to buy. We'd also learned that Enron, Tyco, WorldCom, Adelphi were cooking the books while stealing millions, while the CEOs were stealing millions from their companies. Now, if you want to learn how bubbles in the market form and the consequences of those collapse of those bubbles, with a particular focus on how the players, the crooks, the shysters, and the naive contributed to the bubble and the wiping out of trillions in household wealth, read this book.